Let's talk about location. You know, Hong Kong is something that's near and dear. You have a lot of connections here in the city. Why decide to go for Macau in this exchange?
Well, this is the very new type of assets. This is an asset. It's not security. It's not futures. It's not banks. It's not insurance. So it is very difficult to fit into any particular regulatory model. You don't really know which rules to apply to. In fact, in Macau, it's a new place. They actually instantly get it. They said we have been taxing the casino business exactly the way you guys are getting your returns. Every day walking, there's a revenue, take our share. That's what we do, and that's what they do. They do it because they give them a license, and we did it because we made the investment.
How does it work?
Well, essentially, right now the model is that we actually did 3,000 shops just to try out and see whether this whole new asset class called the DRO, daily revenue contract, or daily revenue obligation actually work. Is invest into small shops instantly in exchange for daily recovered returns. So we did that. It works spectacularly for the last year. 3,000 shops, IRR at 24%, but we need to have a lot more people doing it, and right now it's being constrained by how large our fund is because it's a Cayman Island fund structure. Now we put into a central market open place so that small shops or McDonald's, for example, they can actually offer revenue sharing for their shops, and investors can directly participate in them rather than through the underlying fund, which is the current model. So we're converting the fund model into an open market infrastructure so that people can directly interface. But we will be the one who actually enter all the contracts and then bring every day the cash flow. It's almost like a stock connect. We are like Hong Kong Exchange, buying A shares on behalf of the investors. Michael Connect will be actually executing all the contract with all the shops in China. Every day we bring that cash flow to the investors directly.
I was about to say you took your old hat and spruced it up, really, and I say in terms of coverage.
Shrunk it a little bit.
And shrunk it, but brought it all to the coverage, right?
Yeah.
So 300 is where you're starting from, a small business, and I'm looking at this. Okay, how do I get in on the game? How do I become part of this, for example?
Well, I mean, because of the digitalization in China, that actually all the infrastructure is already embedded in over 24 million shops in China where you can actually literally collect your money every day digitally. So essentially now we're changing genetically how finance is delivered. We're not paying a multiple, we're not paying nothing, we just pay at the cost, but you collect your returns every day and for a period. It's not debt, it's not equity, and yet it is something that has certain components of both. So we have created a perfect capital for the little guy and perfect capital for the investor. Perfect for little guy. If it screws up and it didn't really work out, he doesn't have to pay. If it works out really spectacularly, he doesn't have to pay too much. For investors, return feel like equity, but volatility fixed like a fixed income. The only reason you're able to do that is the daily compounding, because every day you collect money, you can reinvest it. It is the daily compounding giving investors tremendous returns, but on the other hand, it's not at the expense of each individual owners. So the owner individually didn't pay a whole lot, being collectively they paid enough because the velocity of the capital utilization. So the velocity of capital in this exchange is about velocity of reinvestment into the business right away, rather than velocity like in secondary market is really between money.
And for the investors you mentioned, I think, is it 24% IRR? How do you calculate that then using something
that's actually is the track record. For the last 15 months, we invested 900 million renminbi into 3,000 small shops, and that's the revenue. That's the return we're getting.
Okay.
That's the return investor will be getting as long as you do reinvestment every day.
Do you see the data really reflecting what this kind of post-COVID zero China looks like among your small shop portfolio?
The data is tremendously illuminating. For example, the worst day for our hot pot index was Chinese New Year's Eve. And on that day was the peak of convenience stores, because people don't eat out, but people still need to buy. And if you like the COVID curve, last year our index, which we launched on Saturday, was the perfect indicator of China's, granular indicator of COVID last year.
Why?
Huh?
Why?
Because of the way we are able to get data every day, and we are able to get it real time, and we are able to get it on very granular basis. For example, during COVID, when cultural activities were coming almost down to zero, our cultural index, like karaoke bars and gym, all zero. And then our pharmacy indexes, because the pharmacies are doing so well. And then the pharmacies started to do really badly a few weeks ago. And now because of this new flu coming up, and now our pharmacy is going back up again. And our convenience store has been so strong throughout this entire period because people still need to buy certain things.
So while it's a window on the economy in many ways, it's also one that people get involved with. So who can actually trade on this?
Well, everybody can invest on this. This is not a trading market. We do have secondary market. Trading for people who, for whatever reason, need the liquidity. It's an investment market. It's almost like a fixed income market that you generally invest for the duration of the maturity of the instrument because you're collecting returns. Your risk is diminishing every day. You're exiting every day. So it's not about speculating whether the second market is going to trade higher and lower. It's about collecting your returns. Obviously, people wanted to have a secondary market, price discovery occasionally, but this is really equity-like return market, but it's a fixed income in behavior, trading behavior. So it's more going to be an investment market because we're not paying a multiple.